Right, I'm ready. Okay. So let's just look at the Nasdaq first. By the way, if you lose me, if for any reason I drift off, if you lose the connection, it's possible that could be it for this evening. So just be warned. If I disappear, it could be that I've got a loose wire somewhere. I cleaned my PC today. I lost a PC a few years back because it was too dusty, so I kept this one nice and clean. I must have knocked a cable or something because it took me ages to sort this out today. Right. Okay, we've got the Nasdaq up here. So at the moment, this is coming back on itself into 1394. That's a really bearish close on Friday. So we knocked into this zone here. We closed higher on the 1st of February and immediately closed lower on the 2nd. And then we've made a lower high at the moment with a bearish close. So we sat up nicely in the first half of the week, but the market didn't like the inflation data that came in, and we've been selling ever since the inflation data came out on Wednesday. Okay, so just because the Nasdaq is lower doesn't mean to say you need to run for the hills. It's just a warning sign that there is weakness in the market. In fact, this is a good opportunity because if you are in stocks that are holding up while this index is drifting lower, then you've got relative strength. You've got a stock that's got relative strength. So, like I said, just because this is drifting lower does not mean to say you need to run for the hills, because if we sit back into this area here and hold, then we can go higher. If we can't hold this 930, then we are going lower. I'm so tight for time this week, I've not double checked on the data that's coming out, so I will do that now. You've got relative strength, you've got stock that's got relative strength. So don't want to listen to myself. Right, data. Yeah, good evening, everybody. Not significant data. We've got UK inflation on Wednesday. US retail sales. Looking for a bounce in US retail sales on Wednesday as well. G20 back end of the week, and that's it. So not a lot of data. US retail sales is going to be significant. Anyway, Nasdaq, let's move on. Let's go straight to the FTSE, and then we'll get into stocks. So we've made a new high in this range. We didn't close immediately lower. We just we didn't engulf that Wednesday 9th bar. We just drifted lower into the week into this trend line. This trend line is, so we are just clinging, the FTSE is just clinging on, as opposed to the US markets, which are lower. The bottom line is that the US had a much higher bounce on the back of the COVID recovery, and the UK didn't. So the UK is basically, so the US got very expensive, and also the level at which traders were using margin had climbed very steeply. So we've seen a lot of some margin calls on the back of this data. So that has exaggerated and potentially created an overshoot. Okay, so in the meantime, this FTSE, so I would expect the FTSE to come lower, but you know, if we come into this support and hold at 7,500, then we can potentially wave back up. However, any lower closes off of highs like this have got to be noted. So short term, we might come a little lower. As we get into the back end of February into March, I would expect this to pick up. Overall, the US report season has been positive. with one or two few exceptions. But it's typical of a US market to overreact. It's overreacted back end of last year, and now it's overreacting on the downside. Dollar is picking right up. So that inflation has stoked up this dollar. And normally you have a divergent relationship between dollar and US indices. The stronger the dollar, the weaker you can get in the US indices. So we've created a higher low here, higher high, higher low. So this dollar at the moment looks as if that's going to go back to 97, which could spell more volatility for the US at least. FTSE stocks don't mind strong dollar because if their native currency is obviously the pound, and they're trading in dollars in international markets, which a lot of FTSE 100 obviously are, that's a benefit. You know, a strong dollar is a plus to Europe, and particularly London, unlike the US. So let's quick look at the volatility index. So this is obviously, 2 days of selling back in the last week. This is spiked higher, and you can measure this in just like you measure any other market tool. If the volatility is increasing and it's trending up, then expect that trend to continue until it shows it is complete. So we look as if we're heading for this higher 30 level on the volatility index. So quick look at the DAX and then we'll move on. Any questions, punch them in. If I don't answer them, I will come to them. We'll take a quick look at commodities after we just looked at this DAX. So the DAX has come right back into this key line support. I was looking at COVID rates very briefly earlier today, and COVID rates in Germany and COVID deaths have been far less severe in Germany. I don't know, anybody knows anything about Germans, if they are given rules, they stick to them. Unlike a lot of us Brits, you get scowled at if you walk across streets when you do not have a green walkway light. Absolutely scowled at. It's really looked down on. And that's their culture, and it's served them well in COVID. And they have this last bout of Omicron. They have not suffered in the same way as UK and US. Okay, so this is really interesting. This DAX is right into a key line support. So if we dip a little bit, but subsequently come out of this, and then hit punch through 730, that's really bullish. And cyclically, this is yeah, okay. Thanks, Jessica. Yeah, this is typical. This is absolutely typical of January, February. Markets tend to be choppy this time of year as they digest Christmas retail sales, which were hit by Omicron. And yeah, as we get through into the US earnings season and so on, this is not untypical of the start of the year. Okay, Ukraine. You can't help but wonder that the sort of stress in the US markets, and of course that DAX dropping, is part and parcel of markets jittery about Ukraine. There obviously was more tensions in the back end of the week, but the main drop for my money, coincided with the inflation data and the bond market, not Ukraine news, although that obviously is a factor. And so until we get that some more comforting news out of Eastern Europe, then the markets are looking as if they are going to stay jittery. Could we drop? Okay, let's look at S&Ps. Yeah, obviously we if I cancel a lot of this information here, yeah, like Nasdaq and Dow, surprise, surprise, this one is a lot of financials in this index. This one is stumbling and looking as if that wants to fall back into support as well. Now, if this pattern plays out, then we are the 50% of the 2021 range is down there. Let me just double check this is yeah, this is set up properly. Yeah, okay, so the Dow hit the 50% of the 2021 range. S&Ps haven't. So if this 3-touch pattern plays out, then we are looking as if that wants to come on land at 4,200. Yeah, so all the highs ever since we made this new high up here in December, and as soon as we came into January, we closed lower on the 5th. The subsequent highs, this little mini rally here on January has been sold into. So if for any reason we start to turn around in the first half of the week and find ourselves above this Friday pivot of 44.70, you can expect that to go higher. In the meantime, I would expect to see that coming down into 4,200. So US's indices are under much more pressure at the moment than the UK, but the UK could definitely start to fall into line so easily. All right, so caution. That's why I have been taking profits off the table in this early part of the year on some of my trades, some that I would have potentially held on to had it not have been for the jitters in. There's a Fed meeting tomorrow, isn't there? Let's have a look. Didn't pick that up. Got a Fed. Oh, emergency. Okay, that's not on the right. Okay, right. I wasn't aware of that. I've not picked up on that. Why? I've not seen any stories on that. I don't know why. Don't know why I've not picked up. Anyway, so yeah, short term lower. I have been taking some profits off the table. Let's see if we can settle down in as we get through, come out the other end of Feb and settle down into March. Like I said, that is not untypical of the cycle. Right, stocks. Let's have a look at a few commodities first. Gold. If you ever get a situation where you have gold rising hard with a strong dollar, that is a massive fear factor. The common feature of between 07, 08 and what we've got now is strong dollar, strong gold. Now that's relevant because the relationship is normally divergent, because obviously gold's traded in dollars, so or in the main part. So strong dollar, strong gold, that does spell fear. There is a higher degree of fear, which of course is seen in the VIX and the lower closes we are getting in the indices. Silver. I was suggesting that silver was a good one to invest in, and again, as with gold, this is picking up very, very nicely. If this follows, if we get follow through in this, if we can get up to 30 this year, I can see this breaking. I can see this going to 35. I thought we'd do this last year and we didn't. We wandered. So this could be the sort of price action we got at the moment, could be the year for silver. I'm just double checking I've got this set up. Yeah, I have. So my year-end target, if we get follow through, is 32 and a half. That's my year-end target. So of course, if we this at the moment, this is playing out in line with my projections. The pullbacks at the moment is 23. We're up here at 23.60. So I would buy into this price that we saw on the second half of the week. Your stop, if this is an investment and you want to keep in this trade, you're going to have to go at least under 22 and a half. Good question. I'll come into that in a second. So you could trade this. You could buy the physical ETF. You could. I'll show you some silver miners that I like. I've already talked about one or two of them anyway. I'll remind you of them. Yeah, we'll come on to the miners in a second, but on the face, the problem is with the geopolitical situation at the moment. Stocks like Fresnillo and POG are very, from my understanding, they're very exposed to Russia. So obviously you've got mining fields all over the world, or in key parts of the world. But POG and Fresnillo, my understanding is they got a lot of exposure to Russia and Mexico. Okay. Right. So gold and silver, good. Oil is politically sensitive. Massive run. I bought 88 and a half on Friday. It dipped into 88. Sorry, on Thursday. Dipped into 88. Dipped slightly lower on Friday, and then we got the run. So we're fitting this channel very, very neatly. Next stop 95.22. So at the moment, obviously you're going to have to buy, if you want in this, it looks as if you're going to have to buy high. So anything under 90 is a potentially good entry point. That's an almighty big, decent push on Friday. So stay tuned to that. Yeah, oil's always been sensitive to geopolitical issues, and what we're seeing now is no different. I think OPEC are constantly fiddling production levels anyway. Okay, so commodities doing very well. Let's have a quick look at a couple of other commodities that I like. Let's get an update on wheat. So I suggested wheat was a buy. That's pushing up. Any move into 780, 785 now is a buy. I'm looking for at least $10, at least minimum $10 this year. So I talked about wheat down here at 740. We've not come a massive way. Still plenty of time in this. Let's have a look at beans. Called the beans ages ago. They're sitting up really, really high. So I think wheat is a better option, and corn's hardly pulling back at the moment. If there's a gap there is a distinct possibility that might backfill. Yeah, 623 is not that far away. We're only 25 odd cents, 27 cents away from that gap. So corn and wheat, of all the commodities, corn and wheat tend to be less volatile. Beans tend to be the most volatile. Gas has pulled back and pulled right back. Okay. Let's see. I won't put in projections on gas for now. I don't trade it this time of year anyway. I tend to trade it in late May, early June onwards for the next cycle. So that looks as if that is pumping, coming down for the next cycle. Right, I quickly came out, quite a quick flick through commodities. Orange juice back into, that's kissing the trend line. That's been up there at 160. My guess is that'll start popping back up. Safest way to play it is just to leave it. It could so easily come back into this 132, but I wouldn't be surprised to see that turn around here and start popping back up 140 on the orange juice. Lumber. I think lumber has been really wacky. That's a sell signal. I mean, it's gone right into that resistance level and come lower. So I would personally, I favour the wheat, the corn, the silver, any pullbacks in gold. I haven't talked about levels for gold. And those are the ones I'm after. Right, stocks. Let's go to... I'll stick to the ones I'm in at the moment. I talked about Rolls-Royce. Well, always talking about Rolls-Royce. I bought back into Rolls-Royce at these lows down here. So I've got a buffer. I got in at 110. I think it might have been 112, 111, 112. Currently, we've seen 120, 123 nearly. Liking this support zone underneath it. Obviously, we closed lower on Friday. No surprise there. It is vulnerable. It is definitely vulnerable to everything's vulnerable to geopolitical pressures. So I will sit tight in that, and if that goes back to base, that's fine. Obviously, I'm going to be wary if that starts to close, very wary, and potentially will pull it if we start to come under that 110. In the meantime, I think caution is the word. Let's just at least wait until we get Monday LOA minimum. So if you've got itchy fingers, be careful. My advice is to just relax. Manage your risk on any position you've got in any stocks or any part of the market, and be careful. I've taken BT off the table. Now that actually goes against that's gone right against my long-term plan, but I've just took it off as insurance. It is an issue. The BT is an issue here. I would love to be able to buy it back cheaper. £2 is a massive firewall for the BT anyway. If you look at this, we did 2006 and then turned around very quickly last year. So I got back in at 134 down here. So I've taken it off at just under the £2 mark, and I would love for that to come back to 170. But if it runs here, I'll have to live with that. If it pulls back, I will more than likely buy into that. Vodafone, I did the same. I got out at a resistance point. I bailed out. I can't remember the exact price now. I think I bailed out at 123. So yeah, I've missed this last leg. I caught this. I started buying back here at 104, 105. Got out at 123, 124, and here we are much higher. That's the way it goes. Vodafone has been a real slug, but they've got a massive US hedge fund that's invested in them, and they've really kicked Vodafone's backside, because they were. I used to refer to them as a slug, because they were just so sluggish, so slow and lethargic. But it's really woken up now. And again, if any significant drop and pullback in that one, I would buy. Volume-wise, we saw a big spike on Monday the 7th, consolidating after that. I wouldn't be if you're really bullish Vodafone. I would try and wait for a whole 125, 128 pullback. I wouldn't chase this market. That's just one of my rules anyway. Right, moving on. IQE, you bought Vodafone instead of AA. Okay. I started buying this back. I was in this earlier last year. Let myself get stopped out on this drop. And I started buying back at 30, and we're now 37. Volumes are picking up. That's what I like. The volumes. This is a chip maker in Wales. Hang on 1 second. And so I'm looking for 45.50 in it, which would take it back into this 24th November drop zone. It's got a major 45 would be an obvious target. If you do get in this, again, I wouldn't chase this market. It's held up. This has got relative strength, real relative strength. We've seen a lot of fear stepping in the markets, and this one is ignoring it. It's picking up. So I'm liking the strength in this. I am half size position because of this sloppiness we've had in this. I've not gone in full size. However, I would be interested in buying a pullback on that one to make it a full size if this plays ball. If we, it's difficult to say. I mean, if we come back to 32 and hold, I would add at 32. In the meantime, if I am lucky enough to see that push up to 45 quickly, I'll just take it off. All right, but I like the volume. I like I tell you the key thing for me on this one, the real sort of magic button for me was the fact that we dipped under the 2021 lows on the 24th and immediately closed higher. That's a massive buy signal to me, absolutely huge. And that has been that spiced the whole price up after that. So we climbed up there on the 25th, dithered until the 28th, and then started closing back on the 1st, closing higher on the 1st. So that's why I'm so attracted to that one. Asos, I'll start to go through banks and all the usual routine in a minute, but just look at the ones I'm in. Really not sure about this one. I have to look at Boo in a second as well. Any market that can't close above the 20-day average is on probation, and that's a very unpleasant lower close on Friday under a trend line. So I'm seriously considering bailing out on Asos. Right, let's go through the sectors, and then we'll start. I'll very quickly go through sectors, and then we can look at the refer back to the ones we talked about last week, and then you can then by all means chuck in anything you want to look at. So let's look at banks very quickly. We've got Barclays. Barclays is holding 2021 highs. If this has had it, we close lower, obviously, on that. It looks if we're moving out on Thursday, immediately close lower on Friday. So it's very jittery, very nervy. If you're in it, hopefully you got a decent price. If you're in it, I would be very concerned if we start closing under £2. Very concerned. So we saw a lot of selling into the weekend. into the Friday. So I have to say, at the moment, I would have thought that's going to come and find some of these lower numbers again, potentially. It could work its way back to 190 and lower. If you're in it and you've got you're looking for 225 plus, I would just keep your stop out of trouble. Don't be waylaid by news. Yeah, NatWest has been steaming away, hasn't it? So it's had a really good run, and now we're sideways. Now that's got relative strength. We still sat in Thursday's price there. So that is good. Obviously, if we start closing underneath 250 in the first part of the week, that is in trouble. My view at the moment is if you've got anywhere near decent profits, I'm grabbing them. Stan looks in trouble. Stan looks if this little run at the moment is over. To pull back on that 563. However, if it is really bullish, if we do pull back to this 525, that's potentially, if it holds, that's potentially a very good place to get in. Right, I'm going to look at the travel sector and retail sector in detail. In the meantime, let's just look at miners. PAF has been the better performer. That's knocked its head into 20, seen a lot of profit taking. It's come down lower volume. So I'm still good on PAF. It's come back into this breakout area. However, that is two significant closes, and we're off. That 20 is a major firewall. So if we continue to close lower here, then we could start to tip all the way back. In the meantime, if all we do is come back into 18.5, that's potentially a very good place to buy. Potentially. Otherwise, a full-blown move back into support, 18.5 is on the cards. So yeah, I've just been trading as some of these stocks have been coming into major resistance points, I've just been not shy of taking profits in the hope that we get further nervousness into March and I can buy lower. Other miners, right? Let's go quickly through the miner. JLP. Wow. So I talked about that going to 21.64 before, and that fell over at 18.5. There's somewhat of a gap down there at 16. Or somewhat. There is a gap at 16.3. I certainly wouldn't chase the market. If you're in it, well done. SLV perking up on volume. I mean, that's a significant. This 94 is now significant. If you're interested in something like SLV, I think it's a good stock. I think the volumes are picking up. Just exercise caution, try and buy up 94, 95 if you're interested in this one. Keep your stop under 87. And let's look at POG. This is looking lower, it's just not doing it. Let's stay on the theme of metals. So we'll look at Phoenix Copper in a minute as well. Right, poly, that's significant. Close above the 20-day average and pull back. I saw some very handsome volume when that did bounce. I mean, if you're interested, I would try and wait for 1066, 1060. If you're in it, stay put, keep your stop out of trouble. If you're interested, see if that does pull back. You can see it's a huge stress level above it, huge trend line above it. So it's going to need, I think it may want to do a bit of a running jump. So in other words, it might want to pull back into this 8th of Feb that I've been talking about. Relative strength in that we did see some selling into the weekend on Friday, but it held the Thursday range. So relative strength. Let's look at some oil stocks. Tullow, firewall at 60. Massive issue with 60 in the market. It's pulled right. That does look as if that's building to me on volume. So I think this is an opportunity to, if you're in it, you might even want to add. If you're not in it, I'm really liking the way that's come off of 48. Any pullback into 50, 51 is a potential buy on Tullow. And General is General's got an oil pipeline, isn't it? I don't think they're explorers or refiners. I think they've got a pipeline. No, I don't like that actually. Volumes are really coming off on General. If you're in it, just monitor it. That's the best I can say. We'll look at BP because it's had such a good time recently. Yeah, pushing up on volume. Surprise, surprise. If you're interested in that, you might see 397. Let's look at your 88E. So much to go through at the moment. Yeah, 88E. This is a cheapie we've been talking about in the room. Volumes are not great. Obviously, it's a lot of cheapies that have got tight volumes anyway. Seems to be some profit taking up there to me. 2.8 is this area anyway. You might find that pulling right back into this 26 area. Let's see, that's a lot of profit taking. Significant selling on those highs. Right. Yeah, let's look at Gulf. Right. Well, huge support area. I would have thought it might, I would have thought it will come lower. I think it might want to come into that 200, that £2 mark. I mean, this might, the drop might be over, but I would rather bid at £2 on that rather than buy up that high. Another mining stock I've missed on you when you asked about Italia. Oh, I've pronounced that wrong, haven't I? Jubilee I looked at. Oh, come on. Very high. A lot of resistance. Not for me. That volume's way too weak on these highs for me. I'll look at Jubilee very, very quickly again, but I have done it. Jubilee, yeah, already really picking up steam. I mean, if you're interested, if you want to get in that, you've got to pay at least 17, unless we do drop back further back. Right, that's enough of miners, I think. Right, so let's start looking at some of the, let's look at travel. EasyJet, nice little run up. That held up fairly well. That did okay considering what's going on, and also high oil. I guess some of these have just hit such lows, pandemic-wise, that they're able. Normally with airlines, if oil is that strong, normally these airlines suffer on high oil. But at the moment, they're coming from such a low level, and the expectation is that I was watching a report on Southeast News, and they were talking about how they're looking for Gatwick passenger levels to get very close to pre-pandemic in the summer. So yeah, I would have thought, so there's been some profit taking at this 1725. That was very close to the September high, or it was around the September highs, fractionally more. When we hit last time, we hit this 11th September, we dropped right the way back. So 725 is a fire line price for EasyJet. I would have thought you're going to see at least 695, if not a full. If the markets get rocky, that's coming back to 650. It was resilient, so but in line with my sort of current exit strategy, 720, 725. Had I been in it, which I wasn't, I would have got out at 720, 725. IAG. Same story. Now that is a sell signal. That's not to say it's definitely going to drop, but that is a new high in this little range, immediate close lower. So that's been on a very congested area up there for this price. Very congested at that high. 179, 180. If you're in it for 124, 125, I would have thought that was a good exit anyway, personally, with my current way of thinking. And all right, let's look at Jet2. Jet2 is a UK stock, isn't it? Same story. Nice little run, moved into congestion, bit nervy at these highs. A bit out on a limb there. I would have thought that might want to peel back, but yeah, I don't know where this is going to go. All I can say is at the moment, that's a nice little run. If you're in it from 920, then you've done really well to stay in that. If you're not in it and you're bullish on that stock, I would personally sit back and bid 13 and just be patient. I certainly wouldn't buy up there. But that could so easily keep going. Maybe it's going to turn around and go and find 1570. I don't know. It's just not a stock for me. That's all. I'm very, very choosy about my sectors, even more so at the moment, more so than normal. Right, let's look now. Let's stay on this theme and look at Chewy. So we've held on to the 20-day average ever since we dipped underneath it on the 31st. We spent just about the whole of February above the 20-day average. So bullish. This price of 269, 270, no, actually 265, we ran from, so we dipped, looked very nervy in November, then started to close higher. The volume picked up, We pulled right back into that price in early December, and then we went on this little run. When we went on this run, on the 10th of Jan, we came into the drop zone from the 15th of October, sorry. So then we pulled back, but we consolidated. It was bullish enough to consolidate. So we got a sort of a 1, 2, 3, 4, 5. Then we consolidated back here. So we hit the October drop zone, consolidated back, and then we got on another little run here, and we did very well into Friday. It was very hesitant into that 265 again into February after the January test, but to my surprise, that's gone higher. I was thinking we'd see another pullback to this area before it took a run up to that. We've got a gap up here. So in theory, this 250, 260 is now major support, was resistance, now it's support. So if this does get nervy and pulls back, personally, I wouldn't trade that because I just don't like this sector. But yeah, I admit this is a nice little run. If you bought down here and held your nerve, you've done very well. And we've got this gap, and it could well go and find that gap. I personally, given what we talked about on nervousness, I would much rather see that go right back to January levels before I attempted to get in. Let me just pan back from this one and yeah, so the key, again, as with IQE, the key to this one, for my money, was the way in which we behaved where's the January lows? Yeah, so this one came out the gates really well in January, didn't it? Okay. If I was looking at this in December and plotting what to do in January, I would have thought that would peel back to 210 in January, and it didn't. It came out of the gates, held up really well. So there were early signs of it bullish. Anyway, like I said, it's hesitant up here. Could well pull back to 250, 260. I would have thought you'd see that again. But they're not dropping it. Hammerson. I think there's a few of you in the room in Hammerson. Bit of it's done well, bit of a slug for me. But if you just sit there and you're patient with it, and this is a problematic area anyway. These highs are a very problematic area for Hammerson. I mean, again, if I was in, I have been in this, I have been trading this, but I'm not in it on this recent run. 40 is a massive line in the sand for it. So my current sort of shorter term exit strategy would have been to come out of 40 had I been in it. That's tough. It's holding the 20-day average, but it got more and more lower closes in it. I would have thought that would peel back harder, but the fact we're holding this zone is bullish. Difficult to call, very difficult. It's not a big mover anyway. I mean, if it all depends on, if you bought it because you think it's going to 45, 50, then leave it alone. Just don't touch it. If that's why you bought it, assuming you got in at a good price. If you did buy it for a short to medium term profit, then you should be out. If you bought it for an investment, don't touch it. If you're not in it and you're interested, I would try and wait for 35. Don't know if it's going to get there, but it might do. Right. Now this PC problem's really knocked me to one side. Let me just bear with me 1 second. I just want to go through my notes. Right, okay. Just remember what I wanted to talk to you about. Right, let's look at, we've looked at longs. I want to look at my short. This is Card Factory. We've been talking about it for a few weeks now. I've taken one bite out of the cherry already. So I shorted into 64.5, took it off at 54. I gone back in at these highs, and at the moment it's beginning to work. This is a classic target for me, classic bear raider target. Bricks and mortar, weak brand, a lot of fierce competition from Moo and Moonpig and all sorts of other online organizations. I think this, I'm looking for this to drop right back to 30. And we closed under the 20-day average. It's still time to get in this. I mean, if you're of the same opinion, try and offer out 59.60, but you're going to have a stop above 63 minimum, which is not that big a stop anyway. And then see if that can get to, see if they can really close on these 56 and then plunge. Volume backs this up, price action backs this up. Who knows if it's going to work? I'm certainly going to sit in it and try. And I want to make sure I've got enough time for techs. Anybody still in these Centricas and SSE? Let's look at C. Start punching in what you want me to look at. Well, you have been, but give me some more updates. Right, now this C is very interesting. We've come right back into this this support zone, and we are seeing volume. My PC is holding up so far, so this is potentially really good news. It's a cheapy stock. It's coming to a huge area. I think this is worth a half-size position in my book. We've been as high as 13.3. We're down here at 18.6. Then we broke up here in the 15th of July. So we broke up here in 2021, went to 13.5. Did a three-way move back to support. Did a move back into resistance. So this really struggles at 12. 12 is a massive fire line. So we've done a move into 12, pull back to 8.5, move into 12, pull back to 8.5. So if we're going to stay in this rhythm, we could potentially go back to 12 from this 8.5 mark. Right, okay. US tech, yeah, definitely US tech. So yeah, that's one for that one. Any other UK stocks? I'll just flick through some UK stocks and move on to US. Cineworld, picking up. Anybody in Cineworld? Let's have a look at some decent ones. Money Supermarket, I thought was gonna, yeah. See that's kind of a little run and pulled right the way back. That is, let's have a look. The major support 192. Volume is not backing that one up at the moment. So be careful if you're interested. But Sainsbury's. Let's look at some more retail. I didn't look at Boo, did I? Sainsbury's has had seen 340. This is a really interesting area for Sainsbury's. I would have thought, oh, we've got a gap down here. It's really struggling. If that's a bullish consolidation, it's going to need to dip anyway. I think it's going to need to dip further. I think the place to try and buy that's 250, 260. And if that starts turning around 280 this week, then I think that's higher. But otherwise, I would leave it. Next. Okay, that's gone on a pop. So let's now look at Boo then, because I forgot to look at Boo. Yeah, so like Asos, this is not doing it. Now, quite often, if you get that's a buy signal on there the 9th, quite often they do peel back into buy signals. So, I mean, if that turns around and closes above 97 this week, that's got legs potentially. In the meantime, be careful. Be very careful. You've got to go, okay. It is recorded, yeah. Right, let's go to US tech. I'll talk about ones I'm in, and then you can shout what you're in. Let's look at. Okay, Facebook. This is a potential buy signal on the 9th. New low, close above, but volume. Obviously, that looks lower. It doesn't take to be a genius to work out that looks lower. So if we break 2160, that could come down to 2040. If we dip underneath that and close higher, then that could pick up. Yeah, I'm concerned with that. That's coming down. That's lower on higher volume. So I'm going to watch my back on that one. The ones I do like. Let's go to my other checklist. Right, I like. Well, I'm in path. Let's go to path. As long as we don't close under 34.80, I'll stay in this. Volumes are good. We have a gap up there at 61. I'd be quite happy with 46, 48, or 50 would be nice. I'm not getting greedy on this at the moment. Obviously, if the volume really comes in, I'll get interested, but I'm not going to sit tight on that. Roku, very similar pattern. Volume did improve this week. With Roku, I would like to see 22.20. And again, if the volume really picks up, then I will hold out for a bigger number. So Roku, Path, and Facebook. Otherwise, a lot of weaker looking charts in this at the moment. I'm in PFE, of course, Pfizer. And Pfizer closed lower on Friday. So this one's on probation as well. You can see what a huge area this is. Traded Pfizer twice last year, got 2 ranges out of it. I'll show you what I did very quickly for those of you who are newer to the room. If I can just get my pen to work. So I traded, what did I do again? Yes, I traded Pfizer down here, took it off up here and bought back down here, and then got out at that high. Now I'm back in again. So I got that slice. I did actually get the 2 key waves out of that. Now I'm sitting in it on this 50 level, needing it to close above 52 minimum. It's got to, yeah, it's on, definitely on probation. We're coming lower on volume at the moment. That's not what I want to see. So I am cautious. If you are interested in this, I would sit and wait for that to close above 52 and then try and buy 50 or 50, 51. I took an intra-month buy signal on that, and it obviously wasn't enough. Didn't pull the buyers in. Anything? Tell me what you want to look at on this. Let's look at Marvel. Because Marvel has been looking good. Aztec, okay. Nvidia, yeah, Nvidia and AMD. Yeah, look at that. I was interested in buying Marvel recently, and then I just backed off. So at the moment, Marvel looks as if that could come all the way down to 59. Right, let's look at Aztec. What's the stock called? I don't know this Aztec. Pinkish. Oh, you mean you took it on the Nasdaq? Oh right. Oh, we already looked at the Nasdaq. Right. Well, I'll come back. We looked at. You must have missed the beginning because we spent time looking. All right. It's just very quickly. No, I can't because it'll take me out of this. I'll look at the Nasdaq in a minute, but we have covered it. Right. Yeah, you got me confused there. I don't call it. Yeah, I wasn't sure if you were referring to a stock I've never heard of or what. Tesla and skills as in what's SKIL? Yeah, you talk about skills. I don't know that's SKIL. Is that what you mean? Yeah, this was see, a lot of these stocks weren't making any money. They got seriously pumped up and they just got dumped. Is this the right one? Is this the one you're wanting to look at? Because it just looks, it's still not attracting the buyers. Let me try and frame this. 2021 highs, 21 lows. I want to see that above 690. Otherwise, I'm not interested. Really, really struggling. I mean, if we start closing above this 5, then yeah, I get interested. Yeah, okay, I'll take that back. I get interested above 5, but otherwise, I would steer clear. I presume this is the one you want to look at. Nvidia and AMD. Sorry, yep, let's do that. No, I was tracking Nvidia, and I've lost sight of that a bit. Yeah. I at the moment, that is such a heavy sell. I would look to see if that could come back to these January lows at the moment. That's come down on volume, so a heck of a lot of volume. Right, when does it report? Do you know the date? You know what? These markets are so nervy. Unless you're an options player, I would steer clear of it until you get options, until you get the earnings out of the way. Unless you are able to hedge yourself in options, I wouldn't touch it for now. See what the when you get the earnings out of the way, then frame that day's trading action and see which way it breaks. So, for example, if let's if it had had earnings on the 4th of October, I would have framed that 4th of October. If you'd gone short, I wouldn't have short Nvidia, but anyway, if it closed, if that had been the earnings bar, I would have waited to see if that could close above it to buy Intel. I do look at the fangs a bit more as well, Intel. Yeah, they're just these chip makers are supposed to be red hot, aren't they? And they are just getting beaten up. Well, a lot of techs are getting beaten up, full stop. Well, if this is what I would look for in this, I would look for that to come into. At the moment, it's just not sitting up. So I would look for that to come back down to 44.70 at the moment. Is that a big ask? Maybe. But if we close, if we can hold up here, I would get interested. In the meantime, struggling, definitely struggling, coming down on volume. I mean, if I'm too bearish and we start closing above here, if I'm being overly bearish and we come down at 46.90 and hold, then yeah, if it comes into that pink box and closes higher, then it's in with a shout. It's definitely in with a shout. If I'm wrong and even that's too bearish, wait for it to close back above this area here. But in the meantime, yeah, you've got to say that looks lower. I would not buy that. I wouldn't short it, and I wouldn't buy it. If you are bullish, I would wait for that to come into 45, 46, and then see if you get higher closes. When do I think tech stocks will start to recover? Well, cyclically, we could still see a lot of weakness into March. Yeah, I guess the question is the market freaked out by the Fed's hawkishness? Because we're going to get a rate rise in March for sure. So if the Fed day March gives us the rise and the market decides that's going to be it for a while, then we could pick up. This is a scenario. This is not a fixed plan. Let's go to the Nasdaq while we're talking about this, because you're not giving me a look. I'll look at those stocks in a second. It's a good question. When do I think the stocks are going to pick up? Right, assuming this is a cyclical pullback and not a major correction, then 13,750 is another retest of this low, or a full-blown move down to 13,240. So that scenario could play out, and that could take us into Fed next month on the rate rise. Like I keep saying, at the moment, in quite a few of these stocks, there is no reason to buy. If you're looking for reversals, then these are the kinds of levels I would look for. Excuse me 1 second. And again, if I'm overly bearish, if this turns around at 14.5 this week, then we could go up and running again. My earlier scenario was a pullback into 15.5. Well, we saw a reasonable turnaround in the Dow, but this one just didn't have the fuel to get up there. All right, so we are still looking lower in tech stocks still, and all these so-called growth stocks are just not finding the buyers, and a lot of them justifiably, they had crazy valuations, really crazy valuations, and a lot of margin. As I said, I started off this conversation tonight about how much margin a lot of was in play in the Nasdaq, and that, so we've seen that bubble burst. So that's my best case scenario at the moment, looking for this to drift, to keep going. Next stop is 1325. Of course, if we break these lows. Right, let's look at Virgin the SPCE. Very speculative stock, surely. Very speculative stock. It's been pumped and dumped. That's a classic pump and dump pattern. Doesn't take a genius to work that out, does it? So 2021 highs and lows. Wow, I just, this is way too speculative for me. I mean, if you push me, I would say, okay, thanks. Yeah, that's got to close above 980. I wouldn't even look at this unless that closed above 980. If you think of buying it, if you think of shorting it, well, it's already come a long way. A nice short pattern up there. You get a lower close on the 9th of July. Huge amount of selling the next day. What are you looking to do with this SPE? Anything? I mean, Ukraine. Yeah. So I'm just reading your right. Yeah, as far as food supply in Ukraine, I'm not too bothered about. I don't think Ukraine is a major contributor to the global grain market. I don't think it's a major influence. The US wheat belt and South America are the major markets, major producers. I'm not bothered about Ukraine and etc. And when it comes to grains. Right, let me see if there's anything I've really missed. Let's look at emerging markets a second. In all of this noise, you know, I've talked about emerging markets for a while. This is a very, very interesting pattern here. We keep knocking our heads up against this. We're making a series of lower highs and lower lows here. I mean, if this doesn't hold, we really are in trouble. We really are spooked. Let's look at the Russell Index, small caps in the US. That's quite robust. Given what we've been talking about the Nasdaq and seen in the Nasdaq, these US small caps are good. I think small caps at the moment are, if they're proven small caps, are no bad place to be in. I haven't shown you any other shorts tonight apart from that card because I am underprepared for this weekend, this Sunday. Yeah, 24.60 down to 19. Yeah, let's have a look at make sure I've got this line up properly. Yeah, okay, fair dues. We are right back to January 2021 lows at these lows. Yeah, fair comment. Right. No, I don't think. Let me just look through my stock list. I have got others I'm watching and not shared tonight, but I'll go through those. I need to do some further refinements. AJ Bell, I'll just leave you on this one. Yeah, I've been monitoring this one. I'm very interested in this SIP provider. I'm not going to do anything with it at the moment, but I will monitor that. Dark. Yeah, I'm not enthralled by that, so I will keep monitoring that. Menzies had a good run. Look at Menzies, unbelievable. It's come such a long way. Wow, 90 to £5. Wow. I mean, if you pull back from that, where's the evidence that was going to break? I know what's going on in Menzies. Yeah, so we had all this selling in January, deep selling on the 24th. You got a big clue on the 7th. Now that's what I call a decent pullback. You saw this big move on the 7th and then pulled back into the 8th on volume. No, the volume didn't really creep up until the 8th. Okay. Significant, very, very significant price movement there. I wouldn't touch it. They've turned it down, have they? Okay. Vodafone had takeover offer as well, I think, didn't they? Which they've turned it down as well. EMPH. Is Yondra with us tonight? Let's have a look. No, okay. Wow. What a volatile stock. Very, very volatile stock. I think this is a new energy company, I think. Steer clear. Right, enough. I'm off. Thanks for your time. And I'll be here on Wednesday. Catch up with you then. Thanks. Bye, everybody.